Hi, this is James Sugg with Westpac London's end of day report for Monday, the 22nd of April. Well, we had a lot of developments at the weekend, which is probably not really appropriate for a Monday end of day report, but I'll just quickly mention a few pertinent ones. A lot of commentary out of following the G20 meeting in Washington with the IMF and Treasury in the US, making various comments about what the ECB should be doing, what the UK government should be doing in terms of fiscal policy. But the one I'll mention in a bit more detail is the Italian political developments with the leader of the Democratic Party, Pier Bersani, stepping down, having failed to convince any of the other parties to form a coalition with him after the February elections, and also by him stepping down, that paved the way for the re-election by Parliament of Giorgio Napolitano as Italian president. Now, with him getting another 7-year term, that increases the prospect that he'll be able to pull together some sort of administration out of what's left of the Democratic Party, with Bersani now gone, and the Party of the People, the Liberal Party of the People, I think it's called, basically Berlusconi's mob. So markets actually love this, the fact that you've got a gerontocracy with an 87-year-old president re-elected for another 7-year term, and 76-year-old Berlusconi possibly heading for his 4th term as Prime Minister, or even if he's not Prime Minister, he'll probably be pulling the strings of whomever is. I mean, throw in the Pope, who's also about 76, 77, the new Pope, I mean, you really have got a gerontocracy in Italy. Anyway, the fact that markets rallied on this is pretty bizarre. I mean, you got a convicted criminal back, it seems, or on his way back, and you've got a frail old man re-elected as president who couldn't pull together an administration. But markets just seem to be ignoring the fact that the Italian electorate voted out austerity, just like the French electorate voted last year when they kicked out Sarkozy, and the Greeks did as well. Remember the Greek fuss about a year ago now. So markets seem to have lost sight of that. That was the real issue that was of concern 2 months ago to markets. The fact that there's a slightly improved possibility of getting an administration in Italy is actually a side issue to the underlying truth that people right across Europe just vote out administrations that impose austerity. And of course, remember Berlusconi campaigned on anti-austerity measures, so you may still get an anti-austerity government in Italy. Anyway, on the data front today, we had existing home sales in the US down 0.6% in March. The February gain was revised to a smaller one too, so we've got a bit of a softer tone to housing data in the US, and that was continued with those figures today. I mean, sales are still just below their 3-year high. They've been supported by investor groups snapping up relatively cheap houses with good rental returns. Consumer confidence in the advanced April report for the Eurozone improved a little bit further. It's at its highest now since July last year, so a 9-month high. And that was about it, really. So, given that and disappointing Caterpillar earnings, they missed analyst expectations. Caterpillar's share price actually went up because they had improved sales in China, or they were talking about improved sales outlook there. But the fact that they missed on the earnings side was nevertheless seen as negative by the broader market. And that in the housing figures has meant that at the moment the Dow in the US is down 0.15% at 14,525. Just come up to 6 p.m. in London. The London market closed down 0.1%. French market unchanged. The Germans up 0.25%. But the peripherals like Spain and Italy up 1.4%, 1.7% respectively. Commodity prices, a bit of a correction higher in oil and gold. Oil's up 0.5% at $88.47 a barrel, and gold up almost 2% at $1,421 an ounce. But copper's down another 0.75% today. The Aussie dollar, it's at 1.026 against the US dollar. It's continued to drift lower from its 1.055 peak just over a week or so ago. Worth mentioning, of course, peripheral bond spreads have come in Europe, in Portugal, Spain, as well as in Italy today on that election result there. I think that's unjustified, but that's just my view. And that's about it really for today. Lots of important data coming out later this week with UK and US GDP and various business surveys in Europe, which could make the case even stronger for an ECB rate cut either next week or in June. And I'll be back to report on those developments as they come through. Okay, speak to you then.